Hey everybody, Smart Silver Stacker here. I hope you're doing well. Hope you had a great weekend. In today's video, I have got several pieces of information that I believe will be of interest to all of you stackers out there. So stick with me on this one. And on that note, let's just jump right into the gold and the silver markets. So today, both metals are relatively flat. So far at the time I'm recording this, we've got gold slightly in the green, silver slightly in the red, but the price action today is nothing compared to the sell-off that we had in both metals on Friday when gold dropped under 1900 bucks and silver fell more than 5% in the session. And that decline was initiated by the release of the non-farms payroll report. Those numbers came in far above analyst expectations, with supposedly 517,000 new jobs added. Now, those numbers spooked markets pretty much across the board. We had stocks selling off, metals selling off, because we still have this whole, bizarro Fed-driven good news is bad news dynamic where if we get good economic data, investors interpret that as a sign that the Fed is going to be tighter moving forward. But here's the thing. These job numbers that we got, they're a lot like the inflation data, the CPI. And, statistics, it's kind of a field where if you're biased in one direction on something, you can tweak the numbers to tell whatever story you want. And according to this headline from Bloomberg, too good to be true, jobs report draws skeptics on data quirks. The employment report was complicated by the government's annual benchmarking process, as well as an update of seasonal adjustment factors and population controls that economists indicated before the release could make the data difficult to interpret. So a lot of the jobs that were added in these numbers were actually the result of seasonal adjustments. And in fact, on an unadjusted basis, payrolls fell by 2.5 million last month. So that's a bit of a discrepancy there. 2.5 million jobs lost from payrolls versus 517,000 added. So, who knows what the real numbers are actually like. And for this reason, economists at Wells Fargo and at Bloomberg agreed that the Fed is likely going to be taking these job numbers with a grain of salt when it comes to informing future policy decisions. And to me, the loss of 2.5 million jobs, that seems more in line with what we're seeing in other sectors of the economy. We've got record credit card debt, we've got plummeting home sales, we've got big tech companies continuing their slew of layoffs, and I doubt very much if anyone watching is too shocked to hear that the jobs report is basically just a bunch of baloney. So that being the case, I think that the drop in gold and silver that we have seen on these numbers is likely just a buying opportunity. So if you're thinking of taking advantage of this dip and doing some stacking, why don't you check out today's video sponsor, SD Bullion, my preferred source for precious metals, with the link down in the description. And if you do decide to stack some precious metals on this dip, you will be in good company. According to this report titled Gold as International Reserves, a Barbarous Relic No More, this was published recently by none other than the IMF. In this report, which is worth taking a look at, by the way, I'll put a link down in the description, the authors remind us that in the third quarter of 2022, global central banks added $20 billion worth of gold to their international reserve portfolios. And this was the largest quarterly increase in official gold demand in fully 55 years, according to data from the World Gold Council. And you can see from the chart down on the bottom left that the upturn in central bank gold reserves actually began back in the 2008 financial crisis. Gold reserves at central banks had been dropping for some time, but then imagine that the Fed goes and begins monetizing debt and firing up the printing presses, doing QE, and slashing rates, and central banks around the world decided, well, maybe it's a good time to start getting into hard assets, and they've been stacking gold ever since. And, one thing I do hear in the comments section on these videos quite a bit is things along the lines of, I've been hearing this story for 10 years, metals are never going to go up. And I just want to point out to those of you who feel that way, that this inevitable financial crisis that we're approaching, it's been in the works for some time now, at least for a decade plus, and obviously central banks have been aware of this. That's why they've been accumulating gold. Now, the report goes on to identify the causes for this accelerating trend of central bank gold accumulation. And the first one I think is fairly obvious. In times of economic and geopolitical uncertainty, gold is a safe haven. But the second one that they list here is a bit more interesting, and this is from the report. The imposition of financial sanctions by the United States, United Kingdom, European Union, and Japan, the main reserve issuing economies, is associated with an increase in the share of central bank reserves held in the form of gold. There is some evidence that multilateral sanctions imposed by these and other countries have a larger impact than unilateral sanctions on the share of reserves held in gold, since the latter leaves scope for shifting reserves into the currencies of other non-sanctioning countries. So my take on what the IMF is telling us here is that the weaponization of the dollar and G7 currencies, it's leaving no choice for the central banks of countries like China and Russia, who now, out of necessity, have to look for alternatives. And if you're worried about sanctions, gold is about as safe as it gets. And as we continue to see tensions rise between the West and its opponents on the geopolitical chessboard, there will be an even greater demand for the safety that is provided by hard assets. And on that note, I do want to change gears just a little bit to comment on some of the latest developments in the growing global conflict that is unfolding before our very eyes. Since my last video dropped, the US has now shot down the Chinese weather balloon, spy balloon, whatever this thing was, the giant dirigible airship that was floating across our country. And really, I think that an airship or a dirigible is a better name for this thing than a balloon because it's the size of 3 buses or something along those lines. So this thing was shot down off the US coast, and the Navy is now engaged in recovery efforts. And China's response has been to file a complaint with the U.S. Embassy, saying that this was an indiscriminate use of military force, yada, yada, yada. It's harmed bilateral relations. To me, all speculation aside, the biggest story here really is that this thing is even a story in the first place, because apparently this is not the first Chinese balloon of this type to traverse the U.S. over the past several years. Several others had been detected, and while that alone does kind of make me question how secure U.S. airspace really is, I also have to wonder why this one in particular has been the subject of so much media attention, because, this story could have just as easily been buried as a footnote on page 2, but instead it was front page news for most outlets. So I'm not really sure what to infer from that, but I think perhaps there is more than meets the eye going on here. Now, perhaps more concerning on the geopolitical front, though, is a new plan that Russia and Iran are now moving forward with, which is to build a joint drone factory on Russian soil. Now, Iran, they've been supplying drones for Russia's war efforts in the Ukraine, and believe it or not, Iranian drones are actually pretty good technologically. They've captured a few US drones over the past years, and they've reverse engineered them, so now these cheap kamikaze drones that they're pumping out are being used to attack Ukrainian electrical infrastructure and other targets. And supposedly, from reports I've read, they only cost about $20,000 a pop. So, that's a pretty good ROI on these guided weapons. And so the plan now is to build a new factory at the Russian city of Yelabuga. I don't know if I'm saying that right. I'm not really even going to attempt to correct my pronunciation of that. But this is a city located about 600 miles east of Moscow. And the idea here is that the Russians and the Iranians are going to be able to collaborate and make better versions of these drones, specifically ones that move faster so they're more able to evade Ukrainian air defenses. And if you'll recall, there was recently an Israeli strike on an Iranian munitions factory located in Iran, and this was rumored to possibly be a source of some of the drones that were being built for Russia. Both sides kind of denied everything. They said it was unrelated to Ukraine. But now, if we get an Iranian drone factory on Russian soil, not only does this represent a deepening of the military ties between Iran and Russia, but that would also certainly be an enormous escalation if such a facility was somehow targeted. Now, this city is about 700 miles from the Ukraine border, so I don't think that there's any immediate risks of airstrikes or an attack on this thing, but still, you can see how this elevates the risk that the Middle East eventually gets drawn into the conflict if they proceed with constructing this factory. And if the Middle East does get drawn in, say goodbye to sub $100 oil for probably a long time, and hello to a global economic crisis, not to mention the threat that a destabilized Middle East would pose to the petrodollar system. Now, there is one other story that I want to cover today, and that's the internet outage that was reported yesterday in Italy. So on Sunday, thousands of internet users in Italy reported outages and glitches and Telecom Italia, they've blamed it on a glitch with an international internet connection. And the Italian news agencies are reporting that there's no indication of hacking or malicious activity. And maybe that's so, but it does certainly seem like there has been an uptick in events like this, or at least an increase in the reporting on them since the beginning of this year. And just a few weeks ago, we had that FAA system go down that resulted in the grounding of thousands of US flights. But of course, that was just glitches, according to official reports. Then we had that incident of Bank of America where we had videos of customers lined up in the bank lobbies complaining about missing funds, and then Bank of America ultimately ended up blaming that on glitches with the Zelle payment system. And then on January 24th, we had more glitches at the New York Stock Exchange that forced trading to be halted at the open. More than 250 securities were affected, trades were canceled, all sorts of confusion ensued, but of course this was just more glitches. But it seems to me that one of two things is going on here. Either one, there are no cyber attacks, and our systems, even in the best of time, are just incredibly fragile and susceptible to these glitches. Or two, cyber attacks have already commenced, and this battlefield of fifth generational warfare is just going to get hotter from here out, and it may only be a matter of time until we get, the quote-unquote big one. And who knows what that could affect? The banking system, the internet itself, online trading platforms, critical infrastructure. I mean, the list of potential systems is long because so much of our society is now online. And this topic of growing cybersecurity threats, this was a keystone topic at the recent World Economic Forum, and based on a survey of business executives and cybersecurity experts, the WEF published this in their document titled Global Cybersecurity Outlook 2023. Quote, "Global geopolitical instability has helped to close the perception gap between business and cyber leaders' view on the importance of cyber risk management, with 91% of all respondents believing that a far-reaching, catastrophic cyber event is at least somewhat likely in the next 2 years." So, when you read that, you do kind of have to wonder, does the WEF have something specific in mind here? Is this some kind of foreshadowing? Or perhaps maybe this is just a warning that we should be taking heed of. I'll let you be the judge of that. I'm not going to put on the tinfoil hat today. But at the very least, I think we should recognize that this is a real threat. And one of the biggest takeaways on an actionable level for us is that funds held in an electronic bank or brokerage account may not always be as liquid and accessible as we have come to expect. And so having a plan in place, just in case those services get disrupted, is probably a good idea. Now, that could involve holding some cash. Gold and silver are also real money that you can hold outside of the financial system, and maybe even having a few different bank accounts, so if only certain specific institutions are affected in a crisis, to give yourself more options, that might be a good idea too. Now, none of this is financial advice, don't take it as such. It's just some of my thoughts on how one might make themselves a little bit more robust in the event of a potential cyber attack. If you have any ideas, let me know in the comments down below. And all of these stories and developments that I covered today, the one thing that they all really have in common is I believe that they are a sign that we stackers are on the right track by taking custody of our own wealth, by reducing our reliance on the digital electronic financial system, and also taking steps to prepare ourselves in other ways as well. So let me know what you think in the comments down below, everybody. Thanks for watching. Stay safe and happy stacking, and I'll catch you next time. Smart Silver Stacker, out.